If you've invested in crypto in 2022, well, all I can say is I feel you. I'm in the same boat and it's been a very rough ride so far. It seems cryptocurrency decoupling from traditional markets was nothing more than an illusion really. Look, I'm not saying it's never going to happen, but we probably have a long way to go until we reach that point. And this brings me to my point, and that is, what if we're currently witnessing the second .com bubble, but this time in crypto? I mean, sure, Bitcoin does get its fair share of bear markets, but what if this time it lasts not 1 year but 3 years, just like the actual .com crash? And the reasoning behind this is fairly simple. As assets mature, their moves tend to take longer. Let's look at gold, for example, an asset that has a market capitalization of almost $11 trillion today. Gold had a massive 10-year bull run from 1970 to 1980, and then it had a grueling 20-year bear market until the .com bubble burst. Now, of course, people like to push the narrative that Bitcoin is digital gold, but so far it's been the complete opposite, as I've said before, because gold tends to perform well when stocks go down, and Bitcoin is just behaving like a risky tech stock at the moment. But if you truly believe in cryptocurrencies like me, then you also know that blue chips like Bitcoin and Ethereum are not going anywhere, specifically because they have some well-defined use cases. However, when a few projects achieve success in a certain field, there's always going to be copycats that don't actually provide anything relevant in the industry and are simply looking to ride the hype train and make some money. These bad projects will eventually make the bubble pop. Celsius and Terra Luna are just a few examples. Nevertheless, there is a silver lining. The .com crash was a cleansing period essentially. Let me explain. What if I told you that the biggest company today by market cap fell more than 80% in 2000 after the bubble burst? That same company 800x'd its valuation from the bottom in 2003 to the peak of the market. That is, of course, Apple Incorporated. Oh, and if this sounds crazy, let me tell you that during that same period, Amazon dropped a whopping 95%. So this was a period when bad companies were forced out of the market, but the strong businesses that actually had something to offer emerged stronger than ever. In the short term, of course, everything looks bad. Interest rates are high and inflation has been skyrocketing, but this is not the time to give up on cryptocurrencies. This is the time to study potential investments. If you see the teams of the projects you're interested in actively working to improve their products regardless of market hype, then you might have some real winners on your hands. Well, that's not to say that good projects can't fail. Everything can happen, which is why you should always diversify. But first and foremost, do not risk money that you can't afford to lose. We're playing the long game at the moment, and even though you might hold assets that will do really well in the future, you don't want to be put in a position where you're forced out of the market because of financial problems. Anyway, the point is that you shouldn't completely forget about the market just because we're in a bad period. Nothing you heard me say was financial advice. If you've enjoyed the video, hit that like button, it really helps a ton. Make sure to watch this video next because it provides some valuable insight as well.